Welcome, ladies and gentlemen, to the mining pitch battle of Mines and Money Sector Global, and very warm welcome here from my side. My name is Jochen Staiger. I'm the founder and chief editor of Commodity TV and Rohstoff TV, and also the founder and CEO of Swiss Resource Capital AG. It's my honor and pleasure to MC this session here today. As you know, the mining pitch battle is constructed like Dragon's Tank or Shark's Tank, or Die Höhle der Löwen in German, which is a very successful format, but we are much more polite. But anyhow, the thing is, today three mining companies will fight against each other for $1 million virtual investment, unfortunately, but it is like the same in reality. And I'm very happy to introduce to you first of all our contestants. We have Mark Derriman, the managing director from ActivEX Limited. Then afterwards we have Dan Thomas, the managing director from Hammer Metals, and last but not least we have Cochran, the managing director of Aurora Energy Metals. And as you know, we always have fantastic judges who will then hopefully roast our CEOs after their 3-minute presentation within 8 minutes of Q&A. And our judges today are Kevin McElligott, the managing director Australia of Franco, Nevada. Then we have Steve Motteram, the global head of asset development, Noble Group. Then we have Edward Gustely, the managing director of Penida Capital, and Daniel Porter, the portfolio manager, resources of Pure Asset Management. And last but not least, Rick Squire, the portfolio manager of Acorn Capital. I think the rules and everything is very clear, and we like to start with Mark Derriman with the first 3 minutes presentation, managing director of ActivEX Limited. So, Mark, please share your screen and start.
Welcome, everyone. This is Mark Derriman of ActivEX. We're very focused on gold, copper, and lithium in North Queensland. And changing.
Maybe you can scroll it. It's PDF. Just scroll. Yep.
Okay, there's a snapshot of the company. We've got a little bit of cash in the bank. We've got some shares in other companies. Good lot of directors that host the company, and share price at the moment is not too bad. So why Queensland? It's prospective terrain, world-class, top 10 of the Fraser Index, safe jurisdiction, good support, and it's world-class utility and workforce. There we are in North Queensland, in the Gilberton area of North Queensland, and the southeast area around Gympie. Numerous big mines in the area, copper and gold mines in northeast Queensland and southeast Queensland, and significant producers in their own right. Gilberton Gold Project has a history of gold production in the 90s from Melton's. Had a small gold mine, and we're now working along the southern margin of the granite. 6,000 metres of RC completed. There is gold. We found lots of it, and there's lots more to be found. There we are on the southern margin of the province. 7-kilometre trend. We've intersected gold in drilling in the southern bit. We've got the 7-kilometre gold and soil anomaly to test. There's some of our recent drilling results. The contours are the 100, 200 ppb gold, very significant in a context for gold mineralisation. 7 kilometres, some very good intersections up to 4 metres at 12 and a metre at 35. And there's some of the old open pit. There's some of our sections, great grades. And there we have a section, multiple gold lodes, untested at depth, only mined for about a year and a half. We're getting great grades, and this is along a 7-kilometre trend and more lodes at depth. We're looking also for lithium. There's some historical tantalum prospects that we've taken some samples of, getting some reasonable lithium grades. So it's gone from gold to gold and lithium. In our North Queensland area, we've picked up some tenements just south of Georgetown. As you can see through here in our Forsyth tenement, there's a current resource of 50,000 tonnes of lithium in a previous company. So what we think we've opened up is a new lithium province in North Queensland in the pegmatites with lepidolite. There's some results from our sampling of that tenement, very high grade. And quite Colston Lakes in southeast Queensland, porphyry copper, some very significant intersections of copper in that. Further targets at depth that we'll be testing outside the wet season. Epithermal gold, 20,000 ounces of gold and silver. Anomalies down at depth. Key takeaways for us, great provinces, chalk gold, proximity to our mines, great relations, and emerging critical metal producer. We're a good small exploration target for gold, lithium and copper. We're going ahead and we are active going into the future. Bye-bye. That's all. Thank you very much.
Thank you very much. That was great. Please stop the screen sharing. Thank you. Mark? Yeah, thanks. Yeah, now our judges, please switch on your screens that I can see you. That would be great. Thank you very much. Fantastic. Yeah, who wants to raise the first question? Now 8 minutes from here. I know it was super fast presentation.
It has to be. Only had 3 minutes.
Yes. Okay. Well, you've got gold, copper, and lithium. What's the current actual focus for like the next quarter, for instance?
Okay, the focus is our gold project. We've just done 6,000 meters of RC, 200 meters of core. So we're extending the gold search along the 7-kilometer trend. That's our focus. That's been our focus for quite a while now. As I said, in recent times, we've located some lithium and tantalum pegmatites in Georgetown. So that's a subsidiary focus. When the wet season kicks in about November, we've got to move from our North Queensland base, and we'll be looking at our porphyry copper and epithermal targets in Southeast Queensland when the wet season has basically kicked us out of North Queensland.
Then Rick, I think you raised your hand.
Yeah, sure. With the gold project, you've got 7 kilometres of strike. That's great, but how are you actually going to focus down to work out where to drill those first couple of holes and hopefully, to deliver a good result for the shareholders?
Well, we've done an initial small amount of drilling just to define the load system, so that we're confident we've got a series of stacked lenses that basically haven't been tested in the previous. And our next phase will be an IP survey across the southern margin to focus in on the sulfide context and get some conductors. So I guess a combination of further geological mapping and IP survey and some scout drilling, I guess that's how we'll look at developing and working along the 7-kilometer trend.
Have you done any mapping to date?
Yeah, we've got
to identify the stacked loads. We've got,
say again?
To see the stacked loads that you described, do you see them in outcrop or do you see them only in from drill data?
Not both. No, around the Mount Hogan area, there's the expressions of the stack loads are seen as a series of quartz auriferous veins from north to south. So where the loads intersect at the surface, they are there. And I guess along the extent we're seeing other veins that we're going to work on. The mapping across the southern margin has been completed at 1 to 1,000 scale in a portion. So we're going to extend that along the 7-kilometer trend. So it'll be a combination of the geological mapping, which we know is very good at the moment. So we'll extend that, and then we'll look at geophysical surveys to look at depths down to about 300, 400 meters. We know the stack loads are there because we've drilled them in Mount Hogan, so they exist and they're on the surface. And we reckon there's more of them, and the alteration target is distinctly intensive sericite and chlorite. So we've got a number of ways we can search. We can use for the spectral mineralogy. We can look at the IP. So we'll use those techniques, geochemical and geophysical and geological, and work along that 7-kilometer trend. And once we're on beyond that, we've got numerous other metallogenic targets within the Mount Hogan area to test. Kevin?
Yeah, it looks like you've got a great ground package here, particularly with the Gilbertson area. So the other thing for a company at this stage is the team. Can you tell us about the team and their history of discovery, and just convince us a bit that
All right, so I guess myself, I've been a geologist now for probably 30, 40 years. Most of the work I've done has been in Western Australia. My prime experience is gold. I worked for Normandy Mining for about 10 years, Geopico for a few years, and Mincor Nickel. So I've worked for some reasonably large companies. Learned a lot of good exploration skills with Geopico in Eastern Australia, looking for epithermal and porphyry copper mineralisation, and then with Normandy and other companies in the West, primarily gold, orogenic gold things. So I myself have been involved in discoveries in Western Australia for multi-million ounce gold deposits. I was involved with the Red October in just outside Laverton, and that ended up being a 1 million ounce deposit, high grade underground. And with Normandy and Ashton Gold was part of a team that defined numerous 1 million ounce deposits in the Duketon, Mertondale and Laverton areas. So I've been involved from exploration from scratch, finding things through prospecting, and then working with a team up to working in and around the mines and then seeing mines go out the other side. So my experience primarily has been in gold, but I've also worked in Tanner Creek area, looking at the gold, copper, and bismuth ore bodies around there. So I've been involved in drilling for those. I've worked at the Bincor nickel mine in Western Australia, did a lot of near mine drilling at the Mytel. So I've had a lot of experience and generative right through to development type experience across Australia, and a little bit overseas in East Timor with a small group that I have and am working with in early stages. So I guess that's me. I know the gold industry, and I've been heavily involved in the copper industry as well. So that's.
Can I have one follow-up?
Yeah.
A quick one. Can I just confirm that this company, this project is your focus? You're not involved with the half a dozen other companies or something?
No. This is my focus. The focus is Ashton. I have a consultancy that works on the side with other people that I help from time to time. But my primary focus is with Ashton, and we have another couple of pretty good things coming up in the stream. But I guess the focus initially is the Gilberton area, and I think that the gold is fantastic, and I think we've developed a new lithium project or lithium province in North Queensland, what we've found. So that I find quite exciting too.
Daniel, I think you had a question.
Yeah, thanks, Mark. just a two from me, if I can. Your cash balance is getting down a little bit. I think it was around 1.27 million. Can you just talk about what your priorities are for the next 6 months then, in light of that, and does that slow down your momentum at all?
To an extent, we've got a $2.6 million loan facility, which we could draw down as needed, but that's not our prime focus. Our prime focus over the next year is to advance the gold and lithium projects in Queensland, and we've got certainly significant money to do that. We also, I guess, what's working in our favour is I've got a significant shareholding in a company called Fetch Metals, which are a large copper unlisted explorer in North Queensland, and we're the major shareholder of those, having sold our Cloncurry project to them. So when they list, and they're confident of listing in the next 6 months, shares from that are going to generate several $1 million, up to $3 million from the shares. And I think they've got a very great project, and I'm pretty sure they'll IPO at 20 cents or plus. So we've got money to go on with, but I guess we're here and looking at investors here, and I've got investors elsewhere to increase the amount of working capital. So we've got enough over the next 12 months to do some serious damage on our Queensland projects. But beyond the next 12 months, we're certainly looking for further investor funding.
Yeah, great. And just in terms of your new lithium find as well up around Georgetown, can you just share a little bit more detail about that and what's getting you excited about that one as well? Obviously, it's not a region that's particularly well known for lithium, but what's getting you out of bed in the morning on that one?
Okay, well, the thing I like about that is it's I guess a fortuitous event. We have our gold project focused in around Georgetown, around Gilberton. And as part of our project generation, we picked up several more tenements up towards the Georgetown area. Now, I guess we moved further up there because there is a processing plant. And I guess at that stage, we look for the lithium, and a lithium explorer who, unlisted, has a small resource called Strategic Metals Australia. They did a CEI, we got their information, and they've found lithium in, is that it?
I'm very sorry. I gave you a little bit extra, but thank you very much. 8 minutes can go so fast. Thanks for the presentations. Thanks for the great questions. And let's move on now with Dan Thomas, the Managing Director of Hammer Metals. Dan, where are you? There you are. Super. If you have a screen sharing, please do it now, and then the countdown will start.
Thanks, Jochen. Is that good?
Super. Thank you very much. That's perfect. So please enjoy Dan Thomas. 3 minutes.
Thank you very much. Hammer Metals, we're a copper and gold explorer in one of the world's great base metal provinces in Mount Isa, Queensland. We've spent a decade building a quality gold and copper exploration portfolio there. We've got 400,000 tonnes of copper equivalent metal under a JORC resource already at a grade of greater than 1% copper. We've got a team that have made world-class mineral discoveries and continue to make discoveries in the Mount Isa region here. And we're in the enviable position of having built a 2,600 square kilometre package of tenure during a period in which no one was interested in copper exploration. We're fully funded for our upcoming exploration programs, including the current RC program that we're doing. In terms of the company, we've got a $40 million enterprise value today. I would challenge the panelists to find a company with 400,000 tonne of copper equivalent metal in a JORC resource at a grade of greater than 1% with an enterprise value of $40 million. And I think that's the opportunity here for your investment. We're trading at near on 2-year lows in terms of a share price. So I think there's plenty of growth in the stock. And as I said, we've got a team that have got a track record for finding big metal deposits and adding significant value for their shareholders. We've got a dual track strategy to progress our ambitions from being a copper explorer to a copper developer. And the premise is simple: find more copper where we currently are, and we're in the best province to possibly do that. And we're looking around established infrastructure, road, rail, power, water. We are also exploring for large standalone tier 1 deposits. And when you have a look at the names on this map in between Mount Isa and Cloncurry, Mount Isa, George Fisher, Ernest Henry, Cannington, this is a world-class province. We've positioned our tenure here with 2 large fault structures running through our tenements. We think these are capable of producing it. Don't just take my word for it. We've got a joint venture partner, Sumitomo Metal Mining. They participate in 8 operating copper mines around the globe, producing 250,000 tonnes of metal per annum. So they in here, they see the potential in this region, much as we do, and we think we've got a tremendous opportunity at our feet. You can see our JORC resources there at the bottom, as I said, all above a percentage, 1% copper grade, some good value there to be had. I mentioned some really good exploration success. One of the systems we're exploring at the moment is at the Ajax prospect, our first drill hole in this region, 11 metres at 5% copper plus 2.5 grams per tonne. Some really high potential, high grade copper through this region. Last year, we put our first drill hole, very recently, we put our first drill hole into a conductor that runs for some 2 kilometres. We've defined, we've got 1 drill hole into this. You can see there the prospective zone is potentially up to 4 kilometres in length. We've got 1 hole in there. It's produced high-grade copper. We're putting in our next half a dozen holes into this prospect as we speak. There'll be another half a dozen in our JV with Sumitomo in the near future. I think that offers great potential for our shareholders. So there it is in a nutshell. Busy programs, lots going on, lots to come, lots of value to be had. And thanks for your time.
Thank you very much. Perfectly in time, Dan. Stop the screen sharing. Thank you. Now, please, our judges, come back in. Thank you. Yeah, Steve, we had the first question. I saw the first arm here.
Yeah, thanks, Dan. Obviously, great area to be exploring in. My company's had a bit of experience in this area. So, in terms of the prospects, which is it Kalman you think is the one that's closest to you taking through a pre-feasibility study? I'm just trying to understand your journey from explorer through developer. When do you sort of start doing feasibility studies, whether that's pre-feas or definitive feasibility studies, so the market can sort of get a better look at that?
Yeah, thanks, Steve. I think where we sit and where we view our portfolio at the moment is we've got 2/3 of the resource base to get to a development scenario. So in our head, to have a viable economic copper proposition, you need to be operating an operation really for 10 years, and you want to be producing about 30,000 tonne per annum. That's our view on the economics where we are. That means you need a sort of a resource base or a reserve base of 300,000 tonne of copper. Now, we've got 400,000, but as we go through studies, you're not going to convert all of that resource into reserve. So our view is we need 600,000 tonne to have a really conservative base to get a reserve up to enable us to complete those studies. We're not far away from that. We'd like to think that our current prospects have the potential to tip us over that line. We're currently doing some really preliminary work at Kalman. So we're doing some work on optimization of pits and what a mining scenario would look like. We're investigating ore sorting technology. So we've got a trial ongoing for that. And we've got upcoming news flow with respect to that ore sorting work. So we're tinkering around the edges of it without spending massive amounts of money at the moment and going down a study stage. I'd like to think if we're having this discussion in 12 months' time, that would be on the precipice of starting those studies and heading down the track of the development. I think there's a lot of potential in this region. If you develop the infrastructure, the opportunities come as well. So we're not blind to the opportunities that are here and what might present over the next 12 months.
Thank you.
Next question. Yep, please, Edward.
Yes, thank you, Dan, for your presentation. This is Edward Gustely from Jakarta. Can you talk a little bit about your monthly burn rate and what additional runway capital you're looking for?
Yeah, so Edward, as we sit today, we're probably spending in the region of about $500,000 every month. So around $6 million a year. We currently have 5 in the bank at the moment. So in the next 12 months, we'll need more access to capital. We could go guns blazing on the current prospect. We think it's a 4-kilometre stretch of EM conductive zone that is sulfides. It's a mixture of pyrrhotite and chalcopyrite. It's a 500-metre deep conductor. It starts at 100. So this is a 4-kilometre system by 500 metres in depth extent. We could spend millions exploring that. And if we get enough encouragement, we'd like to think we could put multiple rigs at this prospect in the coming 6 months, which means we'd need access to capital later this year. Everything we do is risk weighted. So, if it doesn't pan out in the current drilling program, we've got a lot of good prospects that we've been building up and a lot that need testing. We'll go back to market in about March next year to look at the potential to raise more. And in terms of, slowing things down, it's not on the board's agenda to slow things down and slow exploration to preserve capital. We think we're on a good area in the right metal at the right time to be really exploring this region. And the opportunity really to do that is now, and it's never presented itself in the last decade that Hammer's been here. So we'd like to take full advantage of that as the world looks for electrification metals and the new economy minerals in the Queensland region.
Daniel?
Yeah, thanks for the presentation there, Dan. Just looking at where you are situated in Mount Isa, it looks like you're smack bang in the middle of some pretty impressive projects. Why has this not been developed earlier, or how have others overlooked it in the past before it was, Hammer came together?
That's a really good question, Daniel. It's one of the reasons that I joined Hammer, and my background, I worked for Sandfire for 5 years looking at projects across the world. And, if the knock on this region is it's been explored, it's been known about for decades. The opportunities have been missed, and all the opportunities now are undercover. And that's a really big picture, big company thinking. And I don't think that's true at all. As you said, there's been success in this region. Carnaby, our neighbours, have had some great success. What you see on surface isn't what you get beneath surface. In the region we're exploring now is a prime example of that. It's 4 kilometres in strike length. Copper workings on surface worked in the early 1900s. There's not a drill hole into them. There's nothing testing these systems at depth. And that's a real opportunity in Queensland at the moment, is to be exploring systems like that. For our history, I said we've been around a decade. Again, if you wanted to knock the company, you'd say you've been around a decade. What have you accomplished? We pulled the portfolio together and explored over a decade with $20 million in capital. And that's the only amount of money that's ever gone in. When you look at your overheads, there's not much change out of $1 million a year. It's only 10 million that's gone into the ground. It's really this region's first opportunity to see significant money go into the ground, and that's resulting in these discoveries. And I think there's a lot more to come.
Yeah,
Rick? Sorry, thanks. Rick, I think you had a question.
Yeah, sure. That was a good presentation, Dan. Just wondering, can you give us just a rough feel for what percentage of the existing resource is fresh, as opposed to some of the weathered material? You've got the picture of what looks like a bit of malachite in the background, and what depth? What sort of depth are the largest parts of the resource? Are you targeting quite deep targets here, or do you think they're open pittable?
Yeah, so all of our resources, Rick, are currently sulfides, so we don't include any of the oxide material. I like this picture behind me because I think it's a fair representation of our ground. There is copper everywhere there. But the majority of our resources all of our resources are in 100% fresh material. In terms of the split between open pit and underground, I don't know how much I can say around Kelman because we don't have enough of the resource in an inferred category there to move forward on our mining studies. But, I think you'd be looking at a 50-50 split between open pit and underground. So there's a 20 million tonne resource at Kelman, which is growing. We're focusing on the shallow material. We drilled our first holes there last year, which had some really good intersections at shallow depth. But the economics are in the open pit, and the underground is a nice add on top because the grades are getting better at depth. So we've got 7 metres at near on 20% copper intersected at 800 metres below. They're still open to deep, but chasing them for a junior isn't where we want to be.
Thank you.
Thanks. More questions? Okay, looks like very good here. Maybe one question from my side. How do you want to proceed within the next, let's say, 6 to 12 months? Meaning, as you have just invested, let's call it a little amount into your project, how do you want to go, let's say, more high speed, more full throttle? Are you looking for a strategic partner? Because I guess you have to raise a lot of more money to drill that out, right?
Yeah, I think it's a very, very good point. I think part of the funding equation that gets lost is that we've already got Sumitomo Metal Mining on board over 15% of our project area, and they're funding the exploration for that area. Over 100% own areas, we've still got enough funds to give it a good shot at ourselves. I think the market's appreciative of good exploration stories and good intercepts. So I'd like to think that if we have good results and good success, the money will be available in the markets to proceed. I think having that resource base there to start the conversations with the institutions of the world, I think also opens up a lot of opportunities for us moving forward. So we just need to continue and have success, and I think the rest takes care of itself.
Okay, super. Thank you very much, Dan. Thanks for the judges. So please switch off your screens again. And we have our third contestant, Greg Cochran, where are you? There he is. Hi. Fantastic.
Still here.
If
watching with interest.
Yeah, that's right. I think the recording stopped. I don't know what happened here, but looks like they have a technical issue. Doesn't matter. We move on. So, Greg, if you have any slides, please bring them up now. And so, Greg Cochran, Managing Director of Aurora Energy Metals. Please get started, like Greg. Excellent.
Recording is back online. Yes. Thanks. Sorry.
Your 3 minutes.
Great. It's my pleasure to introduce you to a unique and pretty new critical minerals play in the US. Unique and new. We've only been listed for about 3.5 months. Unique because we are a well-defined, we're totally focused on a very well-defined uranium deposit in Southeast Oregon. And actually, the unique part about it is that that uranium deposit is overlain by lakebed sediments that host lithium. So it's the best of both worlds in a part of the world that is absolutely desperate to supply and rapidly build a domestic supply chain for these critical minerals that are absolutely essential for the world's energy transition to a low-carbon future. I mentioned it's a well-defined uranium deposit. It's a historical mining area, although the uranium deposit itself has not been mined before, but it was well-defined with over 600 holes drilled in it. It's of reasonable size, particularly in the US. It's one of the largest single deposits in the US at about 38 million pounds and about 18 million pounds in a high-grade core. Once again, though, surrounded by this lithium. And I'll tell you more about that because the lithium address is something that you need to take note of. It's the same domain as the US's 2 largest lithium deposits, Thacker Pass, which analysts valued in excess of $1 billion, as well as our own, as in next door neighbors, Gustely Resources, who are capped at about $150 million. So those are the 2 largest lithium deposits. We know the lithium is there because we've assayed historical core. And when you look at this slide, you can see how small in area and extent the uranium deposit is compared to everything that hosts the lithium. And so those are the lakebed sediments that we'll be simultaneously drilling as we progress the uranium deposit as well. And if you look in section, you can see what I mean. That's the uranium deposit, nice and shallow, very low stripping ratio, but hey, the overburden contains lithium. So the uranium either comes for free as long as the lithium pays for itself. So that's the existing uranium, and those are the lithium holes, or the holes that we were able, from historic drilling, to assay to demonstrate that lithium is indeed present. In the deeper area on the Graben, the downthrow side of this major fault that runs through our property there is also evidence that hectorite, which is the lithium-bearing clay, was actually identified there in the late 70s and the early 80s, but never assayed, and we don't have that core. That wasn't ours. So lots of work underway, lots of news flow to come. So I'd suggest that if you're looking for an opportunity to invest in a really unique critical mineral story, you've got to take a serious look at Aurora Energy Metals. Thanks, Jochen.
Perfect on the spot. Greg, thank you very much. Please stop your screen sharing. Now your judges our judges come back. Just stop it. Thank you very much. Yes, Rick, you raised your hand first.
Yeah, sure. Thanks, Greg. That was a great, very short chat. But can you just tell me about any preliminary metallurgy you've done on the lithium? You know, it sounds pretty exciting, but we know that there's a lot of developing technology around the lithium in terms of what the clays. What work have you done to date on your project?
Excellent question. We haven't begun on the lithium yet. So all we've done is we've assayed the 30-odd holes that were drilled in 2011 that were focused, all diamond drill holes were focused on the uranium. We went back and then assayed the overburden, knowing that lithium was there and that is that much more valuable today than it was in 2011. We recognize that the clay mineralogy and understanding the clay mineralogy is absolutely essential. And there's two institutions that we're certainly looking at, that are world's leading clay mineralogy institutions. One at Aberdeen Uni and in Scotland, and the other one in Denmark. So they're the guys that we're talking to help us understand and unlock the clay mineralogy.
Sure.
Sorry, Rick, you had.
I just want one more, if it's okay. Just
Yes.
do you see the uranium as being a in situ leach operation or open cut? What sort of, from what you know today?
Yeah, also a good question, given my years of experience in situ uranium recovery in South Australia and Kazakhstan. It isn't, unfortunately. It is an open pit, but very easy mining conditions. There's, in American terminology, there's a gulch that runs through the middle of the deposit. And so the deposit almost daylights. And the initial work that we've done in terms of basic pit optimization exercise, we've got a very low strip ratio. And once again, the overlying sediments are, as I said, lithium containing. And because they're lake bed sediments, we believe surface mining will suffice, will do the trick. So no drilling and blasting. So really easy to move the overburden off the top of the uranium and then get into the uranium, which will require drill and blast.
Edward, you were next.
Yes, and my apologies to fellow judges, but let me give you a list of questions, Greg, to kind of go through. So let me go through the list. Current cash on hand, monthly burn rate, capital needed to get you to your pre-FS, and additional capital resources and your plan to raise capital.
Okay. Current burn rate, obviously we've only been listed for 3.5 months, so we are in the ramping up phase and getting going, getting momentum. We're finalizing our drill permitting for our first program, and that will coincide with, we'll lag a bit, but coincide with a metallurgical test work program. Overheads in the order of 150 per quarter, Aussie that is, and the spend from now to the end of next year would be on operations, exploration, metallurgical test work and studies would be around $4 million. There's $7 million in the kitty at the moment. So, we recognize that in particular on the back of exploration success around the lithium, where we've got that 3 by 5 kilometer area to explore, we believe, be pressured, welcome pressure, to accelerate the drill out of the lithium program. And so that's probably the moment where we would be tapping the market. We are looking at probably having sufficient funding to wrap up a PFS on the uranium side by the middle of next year, but that is contingent on the metallurgical test work that we're planning. We're reviewing the historical test work as we speak, and there has been a lot. This was, Placer Amex owned the project in the late 70s, so they did copious amounts of metallurgical test work with world-famous Hazen in Denver. Our guys, my predecessors at Mitchell River Group, who are the project generator that brought this to the market, also conducted metallurgical test work in 2011, 12. And so we're taking the best of both those worlds. And once again, the whole uranium processing environment has evolved quite dramatically in the last 10 years. And so there are new aspects that we need to look at. And that's for the first quarter next year, which then can feed into the PFS.
Thank you.
Yeah, Steve?
Yeah, thanks, Greg. Just interested in you taking us through the journey of the listing, the current shareholder structure, and the instos. It looks as though they've got about 10% institutional investors. What's the journey you think you need to take the company through to bring further institutional money onto the register? And then similar to that, is the end market here the uranium in the US? And when do you think you're going to approach the sort of offtake discussion?
Yeah. Okay. Also, once again, really good questions. We have Paradise on board there at about 10%, and we've got Tribeca at about 2%. The project generator group itself, Mitchell River Group, of which I'm not a part, I was brought in as a uranium industry veteran to run the show here. My background is Uranium One and Deep Yellow, etc. So extensive uranium experience globally. So we've got the Mitchell River Group individuals speaking for about 25 to 30% of that register. As I said, Paradise and Tribeca with another 12%, a few smaller funds on the register, as well as then management sitting there with about another 5 or 6%. So the remaining, those outside that are still in the top 20 is about another 14 or 15% from memory. So it's a pretty tightly held register up to about 60%. And then it falls off beyond to the smaller holdings beyond that. So we are certainly aggressively going out there, building the story at events like this, and obviously then on road shows, not just focused on the US, but I've had some very successful meetings in London in June when I was coming back from my first road trip to site, and then in the US as well, given the location of the project itself. As far as all takes are concerned, currently still somewhat premature in the uranium side, because the utilities in the US, and yes, the focus is the US, both from a lithium and a uranium perspective. The US utilities are still hanging back to some degree, understandably, I think, for companies like ourselves that aren't able to demonstrate exactly what the cost of production is and what the production rate will be. I might add, £1.5 million per annum, which is where we would pitch, 1.5 to 2 million pounds, is significant in the US scheme of things. The US always had small rats and mice, dare I say, operations. In the mid 80s, they had, producing 40 million pounds with 350 different uranium mines, and that's not sustainable today. So that's why it needs to be at that scale, and that's what they'll be looking to do. Lithium, I would be more comfortable, but it would have to be an option and not an equity payment for somebody that wanted offtake, and that takes a bit more nuanced negotiation, but we would be open to that.
Thank you very much. Those were exactly the 8 minutes. Thanks for the presentation. So the rest, please also switch on, because now we want to know, as it is still a pitch battle, of course, we want to know from our judges to whom they want to give their $1 million and then to get a winner in. So we have Dan, Greg. I do not see Mark Derriman. Please, can you switch on your screen also? That would be great. Thank you. All right. So let me start in the order what I have written here. Kevin McElligott. To whom do you want to give your $1 million? And please, 2-3 sentences shortly to tell us why. Okay.
Like I got to go with ActivEX, simply because we're focused on gold. So and that's not a knock against the other two, because I thought there were three great companies here with very interesting projects that have a lot of potential and a good future. The icing on the cake is with ActivEX is the guy's history with Red October, which is one of my deals that I was involved in a number of years ago. That was a great payout. So anybody who's involved in that, I want to piggyback on it and go for round 2. So there you go.
Okay, super. So you were a little bit biased. But that's okay, no problem. We have a full democracy here. So Steve Motteram, please, to whom you want to give your $1 million?
I found it difficult to sort of allocate. I think the ones I like most are the pure play copper and then the uranium lithium story. So I liked both of those. I just think in terms of value upside, I like the Aurora story sort of topped it for me, given the location in the US and the whole geopolitics that's going on at the moment across both uranium and lithium. I think that there may be some good opportunities for that company to get further funding and sell down to instos and progress the project.
So, Steve, Aurora is your million, right? Super. Just to make sure that I heard that correctly. Then Edward Gustely, please, to whom do you give your million?
Well, I want to thank all of those who presented. They all have, in my opinion, quality projects that we would certainly want to go to the next phase with to understand more. But, and this is not biased because 30 years in Asia as an American, I have to link with Greg and Aurora simply because I know the geopolitics and the economics going on right now and the energy transition debate which is taking place, and everything is focusing on mini nuclear reactors and the ability to deploy those. And the fact that, Greg, you've taken over this project from the 70s, if you will, is because the environmentalists and everyone else has hijacked the whole discussion and benefits of nuclear. And I think globally, from a macro level, it's going to swing back. The US wants to look at onshoring more where it can. And I think there's going to be very interested participants within this transition energy story, whether it's cobalt, manganese, lithium, nickel. I'm in Indonesia, so Indonesia is promoting the whole EV industry and how it positions itself. Uranium is the next thing. And if you look at who's the players in this, Bill Gates with TerraPower building mini nuclear reactors, looking at mini nuclear reactors to basically perform the base load for all of the information and stations around the world and uninterruptible. I think there's going to be a lot of money coming your way, speculative as it may be, but you're saying give $1 million. That's where I would put my bet with Aurora.
Okay, super. Thank you very much. Then we have Daniel Porter, to whom you want to give your million, please.
Yeah, thanks, Jochen. Look, great presentations today, everybody, and it's a testament to all your hard work. It's a really hard choice. But I'm going to go with Dan Thomas at Hammett today. Really like what you're doing there. Love the pure play copper story, and you're in a great part of the world. I think the International Energy Agency came out with a report a couple of weeks ago saying we're going to need 50 more copper mines globally if we're going to keep pace with stated policies out to 2030. So for me, I'm a big fan of the copper space. We're going to need something to link it all up once we electrify. So yeah, keep at it, Dan. I think you're doing a great job.
Okay, super. Thank you. And then our last but not least, Judge Rick Squire. Now up to you, to whom you want to give your million.
Sure, thanks. Look, I agree with the other judges. There are three good presentations, three great projects. Hard to pick the winner, but I think the two standouts were certainly Aurora. Well, for me, were Aurora and Hammer. But I'll give it to Greg at Aurora. I just found that the project as he presented it, it's quite clear where the targets were, the opportunity to sort of drill out both the lithium and the uranium to define that project. Now, whether it's going to be successful, there are all sorts of technical elements in that, whether it's the mining, the permitting, the metallurgy, and so on. But it was really clear, and also I think Steve and a few others mentioned that just that energy transition, whether it's the uranium or lithium, it's a really hot topic at the moment, and that's got a lot of momentum behind it. So I think a couple of factors are sort of swinging in Greg's favour at the moment. But certainly well done to Mark and Dan. I think they're pretty interesting projects they've got them, but it was certainly Aurora for me.
Super. Rick, thank you very much. Yeah, and the winner is Greg Cochran. Managing Director of Aurora Energy Metals. You got 3 votes. The other companies got each 1. So that's quite clear. Thank you very much for 3 fantastic presentations, 3 really interesting companies, as you guys said already. And thanks to our judges for very good questions, and everybody keeping the time limits. Also, that's also very makes my job very easy. Yeah. So that was the mining pitch battle with ActivEX Limited, Hammer Metals, and Aurora Energy Metals. Thanks to everybody. Thanks to our audience here also. And I hope to see you all end of November in London. So maybe we can do a lovely TV interview with Commodity TV, as we are TV partner of Mines and Money. That would be great. And yeah, I wish you all well. Keep safe and sound. And do not forget to have a gin tonic against Corona. So all the best. Take care. Thank you very much. Thanks. Bye-bye.
Thank you. Thank you.
Thank you.
Thanks, everybody.
Thank you.
Bye-bye.
Bye.